how to avoid the world's oversold stochastic stock trading mistakes. How to avoid the world's oversold stochastic stock trading mistakes. We are on a monthly chart of Rack Space hosting Epic RAX, Romeo Alpha S-Ray, and we want to discuss how to avoid the world's oversold stochastic stock trading mistakes. Let's get started. All right. So the most popular momentum oscillator is the stochastic oscillator, and most stock traders use the stochastic oscillator, especially when the stochastic oscillator is oversold. But very often traders are repeating the same stochastic mistakes. There is a stochastic stock trading mistake that I consider one of the worst, oversold stochastic stock trading mistakes. All right. So look at this chart here. You can see that the stochastic 833 that I use very often, that the TST traders also use. You can see that the stochastic 833 is oversold, beautifully oversold. In fact, it went down to the level of 10. Okay, so normally the oversold is from the level of 25, from 30 level, 25 downward. You can see that the stochastic went down to 10. Generally, some traders say that when the stochastic is oversold up to 10 level, the level of 10, all right, can you see 10 here? All right, they say that that's the best oversold, all right. So what we have seen in the stock market is that a lot of stock traders, whenever the stochastic is oversold, they buy, and sometimes it works beautifully and they get paid. Sometimes they don't get paid. But the problem that we have recognized is that traders are repeating the same mistake over and over. And one of the worst stochastic oversold trading mistake is when the price is going down and the stochastic is oversold and traders want to buy. It is in fact a crazy a trading mistakes. All right, so let's look on this one here. You can see that it's oversold. Should you buy here? Should you consider to buy? So first thing first, all right, so if you are trading, okay, the number one goal is not to lose, all right. Otherwise, it's not to lose. Otherwise, you don't want to trade at all, all right. You don't want to lose, all right. So as they told me before, years ago, it's at the bottom line is how much money are you making in the financial market. So if you are working for Goldman Sachs or JP Morgan or any investment bank or hedge fund as a trader, or you are trading for yourself or somebody else, the bottom line is not to lose and to make money, all right? All right. So if you want to buy, all right, what's the first thing that you should consider? Okay, pay attention. All right, I want you to pay attention carefully, because what I'm trying to do is to change your mindset. All right, so pay attention. What is the first thing that you consider, all right, when you want to buy or sell a stock? All right, now you have the answer. I'll tell you. The first thing that you must consider when you want to buy and sell, okay, is the risk. How much risk, okay, am I taking? That's the number one thing that you need to consider, all right? So anytime you are using either any other technical indicator and you want to buy or sell, check the risk. How much risk, okay, is involved? How much I'm about, okay, to risk, all right? So if it's too much risk, walk away, all right? It's your choice. Walk away from that trade and look for a better trade, all right? Okay, the risk that you are taking will determine whether you are engaged in that trade or not, all right? So with that, if you have that stick in your mind from today, you will start being very, very selective and also very, very defensive. So here it is, this stochastic 833 is oversold. How much risk are you taking here? All right? Now, you are taking a lot of risk. Why am I saying you are taking a lot of risk? If you pay attention to the price that we are trading, the price form a high here and form a lower high. Okay? So the first thing that is coming to our mind is that, all right, it is bearish. Yes or no? But in a downtrend, the most important thing that we are looking at is the new lower low. All right? So here it is. There was this low here. And this one here is a lower low. So anytime the stochastic is oversold and the price form a lower low, is a higher risk. Very high risk, because you want to buy when the bearish momentum is increasing. This is one of the worst oversold stochastic stock trading mistake. Price forming a new lower low, and the stochastic is oversold, and you want to buy. The risk is high at that point in time. Now, you may say to me, George, it is possible to trade it. Yes, I'll talk about it in a moment. But this is one of the worst, okay, oversold stochastic stock trading mistake. A price forming a new lower low. So there was a high, a lower high, and a new lower low, and the stochastic oversold, and you want to buy. Believe it or not, traders are doing that on a 5-minute time frame, on a 3-minute time frame, on a 50-minute time frame, on a weekly chart, on a daily chart, all over the place. And this is one of the worst oversold, okay, oversold stochastic stock trading mistakes. So personally, because I understand this, when I see like this, I'm not interested in this. The only time that you may attempt to buy here, allow the price, is when the price goes back above the prior low. So here you form a lower low in comparison to this low here. If I'm so desperate to buy, or if this is a zigzag pattern, or I don't get confused because we are talking about multi-talented trading if you are a new trader, all right, and we want to consider to buy this, we allow the price to go at least above, okay, the prior low. So as it is now, it is crazy, all right, or abnormal, all right, or quite naive to try to buy because the stochastic is oversold here. We are trading the price on the stochastic, so the best approach, minimum, if I'm so desperate to buy, is to allow it to break above the prior low and to retest it. At that point in time, I will say that, okay, the bearish momentum is diminishing because the price goes above the prior low. But it's not finished yet because there is another resistance ahead. Which one? This high here, the last lower high. So in fact, in order to declare that this stock is becoming bullish, the price must go back above the prior high. Remember, in a downtrend, we are paying attention to the new lower low, and in an uptrend, we are paying attention to the new higher high. So before we can declare that, okay, the bearish momentum has evaporated or has dissipated, is when the price returns above this high here. But we can attempt to buy above when it returns back above the prior low. But the risk is still high, but it's no higher than the risk that we were taking here, which is the lowest low. But if you return back above the prior low, we will say that, okay, it's improving, all right, but the bullish momentum will become only strong if the price return back above, okay, this last lower high, meaning that the price breaks above that, okay, that high here, all right, and then retest it and find the support. We are now out of the wood, so to speak, and we can attempt to buy happily with a less risk in comparison to the risk that we are taking here. This is one of the worst oversold stochastic trading mistake. As I'm recording this video today, on the 30th of June, I can assure you that a lot of traders will start buying here. Sometimes it may work, but are you aware of the risk? That's the point I want to highlight here. Or do you know how to handle that risk? Are you prepared to take that risk? Do you know how to handle the risk that is involved at this point in time? The stochastic is oversold, but the price is forming a new lower low after a lower high. All right, you see now, this is okay about how to avoid the worst oversold stochastic stock trading mistakes. It makes sense? It is also powerful. If you look carefully here on your left hand side, you can see here the best time to use the oversold stochastic is when the price formed, okay, a new higher high. So this is a high here in comparison to this high here, okay. So this formed a new higher high followed by a higher low on the edge of a bullish trend line, and the stochastic is bullish or oversold. So here, if the stochastic was oversold and the price was, you see, we have a new higher high in comparison to this high here, and we have a higher low in comparison to this high, it's telling us that the bullish momentum is increasing and the price is on the edge of a bullish trend line. It does not mean buy straight away unless you are a typical scapeler on a 3-minute doing your own thing. Well, it's up to you. The best approach is to use a top-down trading method. So at this point in time, you see here, if it was truly oversold, we will allow at least the common center line to be broken. This candle is closed. Now we highlight the high of that candle. This candle here, bridge candle, we highlight the high of that candle. And we want the price to retest it. You see, slow down a bit. And then we take it from there. All right? So this is about how to avoid the worst oversold stochastic stock trading mistake. Do not rush to buy when the stochastic is oversold at the time when the price forms a new lower low after a lower high. It's a higher risk, and you want to know how to take that risk or how to control it. It makes sense? It is also powerful. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the GSTW24 traders talking about how to avoid the worst oversold stochastic stock trading mistakes. Happy trading to you all, and I speak to you soon.